Hi, I'm Adnan. I'm one of the portfolio managers on the trust. The objectives of the trust is to identify and invest in growing companies across 3 distinct regions: Central Eastern Europe, Africa, and the Middle East. This has historically been an under-researched corner of emerging markets, which allows us to discover companies that are less understood by the broader market. We have one of the largest investment teams with 6 investment professionals and an average investment experience of 19 years. "2022 was a challenging year for the majority of investors, be it style, region, or even asset class, considering that cash was the best performing asset class in 2022. The removal of Russia from all emerging market indices added an extra layer of challenges and difficulties for the trust, but the trust began to claw its performance back in the second half of 2022. We entered 2023 with the mindset that we have to balance out 2 opposing forces. One, on the positive side, being inflation is peaking across the globe. China is reopening at a faster pace than initially expected. The economic data in Europe is coming in better than initially feared, and a peaking dollar has historically been positive for emerging markets. On the opposite side, geopolitics will remain a risk, and a US recession remains a very real risk as well. Peaking inflation and better economic outlook across the European continent should support consumption patterns and discretionary spending across Central Eastern Europe. Also, well-managed companies are now better equipped to handle the OPEX inflation that was caused by the dislocations as we exited the pandemic, but also the conflict in Ukraine. In the Middle East, we have a growing labor force, not only supported by expats returning to the region, but also a higher participation rate from the citizens of each country and a growing female participation rate. This should support, once again, the consumption across society, not only goods, but also services. And over and above that, we think capital investments will continue to grow in order to push through the reform agenda that each government is looking to achieve. Lastly, we think that a peaking dollar, China reopening, and better economic data should support commodity prices going forward. The transition to a more environmentally conscious world will not only be resource intensive, but also the demand for different resources will change. The companies that are willing and able to invest today and evolve through the transition process will be the ones that remain relevant in tomorrow's economy. In EMEA, resource companies have 3 distinct advantages. One, they're one of the lowest cost producers globally, which allows them to generate a return despite the volatility in the price of the commodity basket that they produce. Second, the resources available within EMEA not only satisfy today's economy, but also have the necessary resources to ensure that the transition process is successful. Take, for example, common metals such as copper, which is necessary for today's economy, but also for the future economy. Blue hydrogen is very specific to EMEA, and the ability to develop blue hydrogen will support the growth of a hydrogen economy in the future. Lastly, we think to bring on new supplies will be much more difficult going forward, hence supporting commodity prices in the next 5 to 10 years as the environmental and social standards continue to increase. Lastly, we think commodity prices will be supported over the next 5 to 10 years as it becomes increasingly difficult to bring on new supply as standards, environmental and social standards become more stringent. ESG is fully integrated into our investment process and affects how we value companies. The investment professional not only analyzes the current ESG rating of a company, but more importantly, we assess and analyze the magnitude of change that management and the company is looking to achieve through its disclosed policies and goals. We then take an ESG risk premium that we add onto our discount rate, which finally determines our risk-reward profile for each investment. Each investment professional is responsible to engage with the companies to highlight issues across the ESG spectrum, not just environmental, but such things as female participation rates and workers' rights, to discuss with management and track progress through the years that were invested in the company. The trust offers investors a diversified exposure into an under-researched corner of emerging markets at a cost-efficient manner than what can be achieved or probably achieved by an individual portfolio. The investment team is able to invest in companies in the benchmark, but also growing companies out of the benchmark, which gives individual investors broader exposure into the region versus an ETF. And while the dividend is not a primary objective of the trust has paid a dividend every single year for the past 10 years.